To Wall Street we go, where stocks fell as new data shows Americans are feeling increasingly concerned about the state of the U.S. economy. A survey reveals consumer sentiment fell in September for the second month in a row. The Dow dipped 273 points. So let's bring in CBS News senior business and technology correspondent Jo Ling Kent. So Jo Ling, what can we read into this data?
We got so much economic data this week, and much of it confirms that the Federal Reserve probably will cut interest rates come next Wednesday, September 17th. That is something the president has been pressuring the Fed to do. And based on this economic data, between the jobs report, consumer sentiment, consumer confidence, inflation, producer prices, I could go on and on. We do expect the data to push the Federal Reserve to actually cut rates on Wednesday. So when you take a look at inflation, what did it say this week in terms of how much you're paying at the grocery store? We saw prices come in about 2.9% higher than they were a year ago. And the month-to-month jump was the biggest jump since January. And so when you see that inflation number continue to be quite sticky at 2.9%, that essentially clears the way on the inflation side of things on prices for the Federal Reserve to cut interest rates. We also want to note, though, too, even though the Dow did end slightly in the red today, the NASDAQ notched a record high. We also had the S&P 500 closing with a winning week overall.
So, Jo Ling, the data is one thing. And according to the data, Americans paid a little bit more for everything from groceries to gas last month. And we all hear the data. What we experience is when we go check out, and we all feel that all the time.
Oh, yeah.
Can you tell us which items specifically got more expensive, and do we know why that is?
Well, let's pull up the list and walk through some of the specifics that we got from the Bureau of Labor Statistics. If you feel like your coffee beans are more expensive, they are. Compared to a year ago, coffee bean prices in the United States up 21%. Audio equipment, say you're buying a mic or a little, something or the other, up 12%. Household furniture continues to go up about 10%. Bananas, buying those every week at our house, up 6.6%. Women's dresses up 6%. Watches up almost 6%, and motor vehicle parts up 3.4%. So what we're seeing here is the early impact, according to economists, of the tariffs taking hold and affecting prices. And so much of what we've seen is companies say, okay, we're not going to have to raise prices. But if you look at the earnings reports over the last quarter, we're starting to see these big company CEOs say, we're going to have to raise prices. There's so much uncertainty. The tariffs are hitting. We can't absorb all of that cost. And guess who pays for those price increases? You and me and all the shoppers out there. So that's what you're starting to see in this inflation number. And that's why you might very well see the Federal Reserve next week say, okay, we're going to cut rates, make borrowing a little bit less expensive, and maybe hopefully improve that inflation number, get closer to that 2% target that they've always wanted to hit.
Yeah, I mean, I can't tell you how many times we've come out of the drive-thru or the grocery store and been like, how could this be this expensive right now?
Oh, yeah.
Oh, all right, Jo Ling, thank you so much for your time. We appreciate it.